Hi everyone, this is Michael Bengiant from Lifetime Investor, and this is the Stock Picks Weekend Video Review for September 3rd, 2022. Before we start, here's our disclaimer. You can pause the video and read this. We're going to go ahead and just review the current market environment as usual. We don't have any stocks in our portfolios right now. We got stopped out of everything or we exited, and we don't have any stocks on our ready list either. We just have some in the watch list. So just getting right into it, it's a poor market environment. We've turned our stock environment indicator to red, and we don't have any recommended stock exposure at this point. It's just we're in a bear market. You have to remember that the bear is reasserting itself, and at this point, cash is the best position. We're just seeing a lot of selling after Fed Chairman Powell basically didn't give Wall Street what it wanted to hear. And the upsiders or he's basically telling everyone that, hey, we're going to probably be in for a much longer period of higher interest rates, and it's almost inevitable we're going to be going to a recession. So there's just a lot of headwinds in the market, and so we're just not seeing any of the leading stocks really working. We're getting little breakouts that last just a couple days. This has been the theme for almost a year and a half now. Really pretty amazing what's going on under the surface, because at times the indexes were actually looking quite strong, but most stocks were just not working very well. And it's kind of working its way across the board, the damage under the surface. We're seeing, key areas like semiconductors and energy and metals and mining. Just one by one, they're just getting hit. And I expect probably more of that as analysts start lowering their estimates of what's going forward. They've been keeping them pretty high. So that's the market overall. Now, without getting, it's easy to say, well, what's the point of even continuing if there's, we're not doing anything. The key part is two. One is two things. One is that we don't know when the market's going to change, and it can change very, very quickly and become a fantastic buying opportunity. And that's what happens in bear markets. This could go on for longer. It could end in a week. We just don't know. It could end in a year. But all we know is that when it ends, the longer this bear market goes, the better the buying opportunity is going to be. And there's going to be a period where you're going to be able to make a lot of money in a very short amount of time. That's just how the market works. The best buying opportunities were after the big crash in 2000, especially in the NASDAQ, which went down over 80%. If you can imagine that 80% decline in an index. But there were absolutely incredible buying opportunities, including like Amazon. I bought shares at $4.50, $4.50 back then. All sorts of things. Then, of course, we had the financial crisis. March 2009 was the bottom. Fantastic buying opportunities. I was lucky to be there for that. I would say maybe not April of 2020. That was just almost like a flash crash. But of course, it was amazing buying opportunities. But it was just such a short bear market. I mean, I think in technical terms, the bear market was over in like 10 days because it rallied so fast off the bottom. We were already off 20%, up 20% from the bottom, and just like it was like just under 2 weeks. It's something just incredible. But that was kind of an unusual situation. So that's just it. We always have to be just mindful of what's going on and just keep our finger on the pulse because we don't know when it's going to change. But I can tell you that it will come, and we're going to do very, very well when that time comes. But in the meantime, this is we're learning also. We're continuing trying to improve our skills at reading stocks, reading charts, reading what's going on in the market, and it's a skill that's very, very worth acquiring. So that's it for the overall. Let's just go ahead and go directly to some stocks. We don't have a lot, so I'm going to go to the first one, which is Target Hospitality. Now here you can just see. Look at the difference between. Here, I'm just going to pull up one I just showed in our Market Trend Advisory. So here's Alphabet, one of the past leaders. But look at this stock. It actually looks like it's almost like you should be shorting it because we're getting almost like a ledge pattern here. And you can almost see we have what's like a head and shoulders. Here's the left shoulder, there's the head, and then the right shoulder, which is lower. and then it's broken down into this kind of ledge pattern, and it's starting to go. I would not be surprised to see this fall. Now, this is not a leading stock. We don't look for these stocks, and the reason is the relative strength is 35, and that just means that 65% of stocks are outperforming this one. That's not a leading stock. Look at the market. This is the S&P here. It's just doing what the S&P is doing. It's because it's such a big stock that you can actually see it's just basically outlining the S&P. So that's not a leading stock. Let's look at another one. Here's Lanthius, a company we've had on our list before recently. But look at the difference. The S&P is coming down. This thing is going straight up into all-time highs. Look at the relative strength, 99 out of 100. 99 out of 99. So it doesn't get any better than that. And look at the sales and earnings. There's something going on with this company when we're having triple-digit sales and earnings, and just increasing sales and earnings. So this definitely, and it's leading. It's just made all-time highs last week. So these are the things we're looking for. These are the leading stocks. So let me go back now to our first one, Target Hospitality. Same thing. Look at this. Look at the relative strength line. Here's the S&P coming down. This thing is just going gangbusters, up 100% or more. Actually, see, it went from 5 to 14. That's a pretty big move. Here, and earnings went from minus. Now suddenly they're strongly positive. Sorry, the sales. I'm mixing them up. Sorry about that. Earnings over here. So we have triple-digit earnings coming off, of course, minus numbers, but we're gone positive. And the last quarter went to 24 cents. And then we have sales, which were minus compared to the year before, and now we're actually going up. And we've jumped from 45 million in sales to 109 million in sales. So again, something's going on there. There's a reason why this is now outperforming almost the whole market, except for just the few other stocks that are at 99. So this is one we're looking at. Let's go to the daily though. Now, of course, it's getting, I think, pulled down with the market. It tried to break out a couple times here. We did have it on our list, but you can see this is just what's been happening. A breakout, it fails. In fact, this one broke out and it ended up down at its lows. It tried again, closed at its lows. The market is just can't get out with this much selling going on in the market, but it's definitely a stock that we're watching, and it's got the look of the leader, but being held down by the overall market. And also, you can see how the volume is really starting to pick up, with institutions ideally getting into it. In fact, let's take a look at that. We don't have any institutions from the top list here, but we do see the fund ownership is starting to increase, which is always a good sign. So, and you can just see from the annual earnings, we were minus in 2020, a little bit less in 2021, and suddenly we've jumped up to $1.37, and next year's projected $1.98. And it's looking good for Target Hospitality, so we will keep watching that. Let's go to the next one, PTC Therapeutics. PTCT is the ticker. Again, it's got a different look than most stocks that are hitting new lows or near new lows. This one's moving up. Now, this is a biotech. Biotech Engines Group is 3 out of 197. So this has been a hot sector. We've had quite a lot of stocks that have been showing up on this, but just some of them are just not. They've been kind of being held down by the market, and it's a little bit riskier group. Let me just go to one we just had and we took off on Friday, Amelix. This one was an IPO, was looking really strong. Again, tried to break out, failed over here. Tried to really break out here, just came straight back in, and then it plunged at one point, I think almost 30%. So this is not the action we should be seeing. This is what we see in bear markets. Now, you can say, I think in this case, there's some poor FDA news that the market didn't like. But you see this kind of action more and more in bear markets, and not so much in in a strong market. It's a little bit more forgiving. We had another crash over here. So, but we're seeing this kind of action in many, many stocks. So another reason why we've taken our exposure down to 0. So going back to PTCT, it's looking pretty good. Again, it's probably being held down by the market. Tried to make a move up on Friday, came back and ended up at its lows of the day. But the relative strength is looking nice. It's not making any money, this company, so it's on the riskier side. And but we'll watch it. It is definitely in the right sector, and it's actually acting pretty well. But we're looking for another. This was actually a really pretty nice little cup with handle here. You can see how it got really tight trading here. The volume came way down, and then we broke out. For whatever reason, we didn't catch this one at the time when it broke out. But that's okay. We're always looking for. There's always more than one buy spot too. So this one we didn't catch this. It got very volatile too. I think our reason. Oh, I don't remember why. Because we were coming right into earnings, and we didn't want to. It actually went up quite a bit. We would have been okay, but this day was pretty volatile. So that would have tried to shake us out. But that's the problem we sometimes have, is that the stocks move into earnings, and you're sometimes stuck. So we don't want to take the risk. Next one is T-Mobile. Again, you can see they're all kind of have the same look. They're trying to break out, but they're just not being able to make a lot of progress. Now, for what I've been hearing too, T-Mobile is really taking on Verizon and AT&T and really kind of eating their lunch. So this is one that seems to be doing really, really well in the cell phone area. So, but again, just a few times you can see it's just kind of poked its head up out of the buy range and back down it went. So we're watching that. Parsons Psn. This one's starting to break down a little bit more. You can see that relative strength dropped to 91. Again, you can see just this every time it's been like the other ones, it tries to break out. There's no institutional support up there, and it fails. So really what's happening, too, you can look at the volume just on these breakouts, it's really not doing much. So without the institutions really stepping up and adding to positions, we're just getting retail pops, maybe on some message board somewhere or on Reddit, somebody's saying, oh, buy this stock, and that's what happens. And then of course any institutions are usually like selling into that. So they're taking advantage of the retail investors kind of just doing their work for them. Let's move on to Dollar General. This one and Dollar Tree. Dollar Tree really just broke down. Let's take a look at that. DLTR is the ticker. This was actually a good sign back here. For whatever reason, I think there was bad news on Target or another discount retailer, and then it just came ripping right back a few days later. Very good signs, almost like it shook out all the weak holders, and then it's tried to break out. Again, tried to break out, came in, just couldn't get anywhere, and then now we've cracked open again on earnings. Just not the what we want to see. But if you look now at Dollar General, it's a little bit better picture. Didn't have the same. It cracked open here too, but it hasn't fallen apart on earnings. Earnings didn't come in great, but again, it's a lower RS stock. It's acting okay, but we're getting down to the lower RS relative strength, and so we always looking for the highest ones, 95 or above. The last one we'll look at is Costco. COST is the ticker. And this one too, another big retailer. It's formed a nice cup, tried to break out, and it just kind of failed. We have this on our long-term outperformer list too. In a better market, it's sitting right at the convergence of its 200-day, the black line, and the 50-day. In better times, that would be a really pretty good place to buy it. It's usually getting support at these things. Let's look at a monthly too. Now, we don't see any support in the monthly. But I'd say in this market, we're just staying away from everything. It's just not, the risk is just much higher of losing money than of making money. So, but in normal times, yes, we would probably be looking to add a little bit of position here with a tight stop. In fact, since we're just below, so sometimes remember too, a lot of times people put their stops right below key moving averages, and sometimes the price comes down, hits those stops, you get a big spike, and then it comes back during the day. I don't really see any examples in this chart, but you'll see them many times, or it does it at the beginning of the week, and then by the close of the week, institutions have stepped up and bought the stock. But we're going to have to stay away from that. That's really it. We have no positions. There's nothing on the ready list. Really just kind of slim pickings this week. But that's it. We're always looking for the best stocks. And when the market turns, one or more of those stocks that are, heading up while the market's heading down are going to turn into the true leaders of the next bull cycle. And likely there'll be names that you haven't heard of, which is great because they won't be overcrowded, and there'll be lots of room for them to make big moves in the future. But we're just in that difficult period and in a bear market. So hang in there and just continue to learn. Hopefully you're learning from these videos, sort of what we're looking for, how to kind of analyze what's going on for each stock. And I can guarantee you there's going to be great times ahead. We just don't know when it's going to be. Okay, I'll talk to you next weekend.